What's going on, guys? We're here today in Connecticut, and we're going to be hanging out checking out what Stephen Kalayjian is doing every day from 8 a.m. till 4 p.m. when the market is open, how it works, what he's doing, what he's looking for, and everything that's going on inside of Steve's room. You're going to see it here in a minute. You've seen it before, but now we're going to get a more in-depth look at kind of what goes on, what Steve's looking for. So come along. I'm taking you inside where most people will never be able to go. So feel lucky. Stay tuned. Come on. What's going on?
How you doing, brother?
Good, man. So, Steve, here he is, the man, the myth, the legend. All right, break down what you're doing right now. It's 8 o'clock in the morning. What are you looking for? What are you kind of focused on?
So I'm just getting my eyes, zeroed in on what's going on. I just walked in about 10 minutes ago to start getting my desk organized, and then I'm just starting my live room at 8. Checking my economic calendar because I don't like to trade into any economic news. So if there's any 8:30 numbers coming out or at 10 o'clock, I want to get ready and prepared for it. But just right now, I'm just going left to right, just checking out the futures contracts, where the overall markets are. Looking at some of the forexes, the pound, the euro, the dollar, yen, and looking at the index futures. I'm trying to buy the S&P futures because the futures 8 o'clock in the morning. Equity markets start at 9:30, but I got a lot of guys who trade futures when I come in at 8 o'clock in the morning. So whether it's the index futures, the crude oil, currency markets. I have a GDP number coming in at 8:30, so the economy looks like it's strong. It could be a sign that the Federal Reserve is going to start raising interest rates again. And if it's a weak GDP, well, it could be taken two ways: that the economy is starting to falter, and that maybe that it would be offset by the Federal Reserve not looking to raise interest rates again. So there's a combination. It's a whole way of, you have to interpret it, but hey, S&P, sell 90 or better here, and then cancel the balance. So, all day long we're in here, but right now after this trade, I probably won't do much, because of the fact that, you don't want to have a position going into a big number like GDP at 8:30. All my life, I've never traded into an economic news. I mean, I have, 30 minutes, 25 minutes before, okay, S&P is 9.25. So I probably, I wouldn't be doing much here, so I'm going to get on in 10 seconds, but people who are normally on a little bit before would have probably caught that, one little scalp trade on the S&Ps. If you look at all the 4 ETFs, reversed yesterday and continued to be in a solid uptrend.
What are we looking at? You got a lot of screens. A lot of people are like, oh, what do you need all those screens for? Tell us kind of what we're looking at on the screens and kind of break it down. I think I was trying to explain to people how, every screen is either a different instrument or a different equity.
Correct.
Or a future. So
because I have so many screens up is not because of any ego or anything like that. It's because of the way I've been doing this for well over 25, 30 years. And that's because of the fact that I want to be able, even though technology, which I have behind me, with my 3 assistants, I have my algos running behind me and they're blurting out stuff for me.
Yeah.
Right? But it's important that, when I'm more of a visual guy too, right? So when I'm able to have all my different instruments that I look at, that I trade, that my customers and my traders look at, right? It's good that, I'm in a rhythm with it. So instead of just having the algo just say, okay, buy S&Ps, then I want to watch the pattern, and then I can trade in that pattern all day long. Number one thing is you want to be on the right side of the market, right?
Yeah.
So I'm able to identify the trend, whether it's a negative or a positive trend, and then like yesterday we caught the whole reversal up.
You're also looking for kind of like correlations too.
Yeah. So
like with the SPY. How does that work? Like, let's say I'm trading the E-minis.
Right.
What am I looking for in the SPY?
So when I trade, you can trade the futures contracts before. My research has shown me you can trade during the Tokyo and the European session outright using my technology, and then you can trade up until 9:30. So what happens is that once the bell rings at 9:30 and all the markets open, equities, ETFs. So yesterday, for example, if you look here, I caught the buy reversal using my proprietary algorithm on the 15-minute time frame. I caught the buy reversal here at 12:45 on the spiders, right? But if you look back, and I have to scroll back here, you can see that when I got the buy signal on the S&P futures right here at, I think it was about 15 minutes before, 11:45, like an hour earlier. So at 11:45, I caught the buy signal, and I said to everybody that I thought the lows were in for the day. And then at 12:45, when the spiders which trade like a stock, correlated with the continuous contract. Now they both lined. So now I knew the lows were definitely in, and I was trading from the long side on the S&Ps or the equity markets as a whole. Done so much research on this that I wrote this, and the way they line up, very powerful, and you should be going in that direction. So that's why I'm able to see, and I teach this to people who are in my live room who use my software as well. High alpha generated trading ideas, in and out, market direction, seeing things that a lot of people, I feel can't see, and this is what I do to try to help them.
How long are you typically in a trade?
Anywhere from 1 to 6 bars, which means anywhere from 1 minute to 30 minutes on a trade. I watch. I just absorb, and then I'll wait. Sometimes I've seen, big drops and then huge reversals up, and so you just want to be able to let the dust settle a little bit. Usually the second move is the right direction from my years of experience. 10-year bond still bullish here on the 15 and 30 minute time frames.
All right, market's about to open. What are you looking at right now? What's kind of the game plan?
The indexes are down. S&P futures are down 6. The NASDAQ futures are down 23. That's the gauge of the market right there. Overall, I have buys of all my ETFs, the spiders, the Russell, the Qs, and the diamonds. So right now we're still in buy mode, even though the market's going to open up a little weaker. So right now I'm just going to be patiently waiting here and see which way the market's going to dictate eventually.
How quick do you normally try to get in once the market opens?
Today there's not no umph to it, but normally sometimes, like if you see like an 18-20 handle move up, I try to fade it and short it right on the opening, and then try to look for a quick scalp.
How does the market open affect the futures? Because obviously the futures are already trading, but they're kind of trading on the idea that the future price.
Right. So right now you're just going to wait to see where a lot of the underlying stocks are going to open, like the Amazons, the names that are the Apples that are going to, like right now Apple, I'm in buy mode, right? The NASDAQ futures is down 22. Okay, here we go. All right. So, all right, Apple's still in buy mode here. Tesla, wow, new highs here in Tesla. All right, we have sells in, Intel takes out the 52.96 level. Intel, you take out the 52.96 and Intel, you're going to get a sell signal here. All right, 10-year bond, look to cover here, 4.5. Shouldn't have been able to sell 05s. No way you were selling 05.5s. Use a 5 stop if it starts going, but you should be complete here. Half bid's going to get hit out here at a half, so you should be filled. Let me give you some key numbers to watch here. Spiders need to hold above the 278.43. Russell, 156.73. Qs 172.86, and the diamonds 259.27. These are all really big numbers here. If any of them start taking out, we're going to see a reversal to the downside. Right now the Dow's right up $1 here. It's 10:03 now. We probably, how many trades we do today? About 24? 20. Did about 20 trades. We probably going to be in the mid 60, 70 range. Right now we have buys on the S&Ps, the spiders. The Russell just reversed negative, so one of the 4 ETFs are now in sell mode here. So I just feel like the market's really heavy, and this pattern on the bigger time frames got to be complete. So I'm still looking for another 20 to 30 handle push down the next couple of days to complete that before we get another push back up on the bigger time frame.
So normally when I'm trading, I'm looking for opportunities in terms of a stock being overextended to the upside to go short, or oversold to the downside to get down to support area to get long. Kind of what are you kind of looking? I mean, other than looking just at the.
Well, I use my own proprietary algorithms. So I really never look at anything. I could show you examples in my 36 years of an overbought condition, and the market still rallied 2,000 points. So the way I designed everything that took me 8 years of my life, I'm able to identify the trends and reversals and the patterns I set up. And I have, using my overbought, oversold oscillators, so I'm pretty in tune to like how I use them and use them with other indicators, so I can pick up divergence patterns and oversold conditions that I know how to use. And I teach that all day long.
Is there a reason, do you have a preference between the tick charts and bar charts and
candle
candle stuff?
I'm just so used to the bar data like that I've been looking at, and to me, it's the only way to look at it. I get into a rhythm with it more, a flow.
Okay.
So it's what my eyes are pretty much trained on a daily basis.
Can you give us a quick little explanation of how a bar chart works?
Yeah, so basically looking at the exchange traded fund spiders, SPY, it's just data coming in and just the prices, within that. I'm looking at a 5-minute time frame, so the data is just coming in and out. And then basically the way I have my charting application set up with using my own proprietary algorithms, I'm able to, identify the patterns and the price action.
So obviously on that bar, you have on the left side's the open?
Yes, the open of that bar. Now you can see the yellow digits right here to the right because my right eye is always currently on that bar. So when I trade, I'm always looking at the current bar, and all these numbers to the right has very meaningful data for me. So right now you can see, it's just dropping here. You can see that the high on this bar, and I click on it and I can see the high is 278.97, and it just got down to the 86 level. So from high to low, it just dropped 11 cents. So I'm able to identify much better visually what works for me. It may not work for someone else, but most of the people that I teach and who are trading are using at bar data.
Okay. Because I think, like for me, when I'm looking at candles, I see the red and the green on the candles.
Mm-hmm.
In terms of, obviously if it's selling off, I'm seeing that and taking that into account.
Yeah,
but for you're not really.
Yeah, I'm using my own way of my methodologies and how I'm trading using my own proprietary algorithms, and so I never really used candles. I looked at them once, I don't know, maybe some 30 plus years ago, but I just not something that I look at.
Yeah, you're not really looking at volume.
No.
There's no volume.
Well, the only time I look at volume is just like when it's super slow. I just want to see how many contracts are trading on the S&Ps, and normally they'll do 20,000 contracts on a 5-minute bar, and right now we're ahead of pretty much in tune for that number on this 5. I don't look at volume when I trade. Is that what you're asking?
Yeah, because
no.
Some people are like, oh, if I see big spike in volume.
No, I'm not going to do that. I'm not going to trade a symbol that has no volume where it's like maybe it does 500 shares in an hour. I don't illiquid. I don't go anywhere near illiquid symbols.
So we're at 27 trades right now. It's almost lunchtime. Well, we'll say 11 o'clock. It's almost 11 o'clock.
We're on pace to do 60 to 75 today.
On a really, just when the market's just rallying. Like, what do you think the most trades ever made, like in one day, in the kind of like in the ticker talker room and stuff?
Probably north of 100.
Yeah.
Yeah, easy.
And then obviously you see a slow day when the market's kind of just flat. It just.
Yeah, anywhere between 40 and 70.
So obviously that comes into play, like you said, waiting for the setups, being patient.
You got to be patient.
If the market isn't showing you the entries, you're not buying.
No way. I'm not just. I'm just not gonna have people commit capital just for the sake of committing capital.
Well, I think a lot of people sit there on the computer all day and they're like, they feel like if they're not in a trade, they're not. You know what I mean? Like they're not working.
Yeah, I get that all the time. That's a great point. A lot of people say like, what do I do next? I'm like, dude, you got to chill out.
Yeah.
You just got to wait until the pattern's set up. Let the market. You want to be right or you want to just gamble? I'm not the gambling. I'm waiting. I want the odds on my side.
Do you ever notice, obviously, like in the middle of the day, it kind of just slows down? Because you get those, you get the bigger moves in the morning, kind of. Trends kind of develop and start moving through the middle of the day. And then, like yesterday, the market right at the end of the day kind of rallied into close.
The market's, in my point of view, doesn't have a predictive pattern like that. There are days when it's like you look up, it's 3 o'clock, and you're nonstop.
Yeah.
The last week or two, I would say that it's been pretty much just quiet. I could never, there were periods of time when you couldn't even do this interview like this right now. Every day is a different day, so I don't come into the day knowing, okay, from 11 to 11:30, I'm just gonna, relax. It's not like
that.
Take a nap.
Go to lunch, a couple hours.
Go to lunch. We eat at our desks. This is military here.
In terms of, as like somebody from the outside that sees like, oh, the market crashed, how'd you make money today? But there's opportunities in a bear market. There's opportunities in a bull market. Mm-hmm. Do you have a preference, really?
I think the markets. You make more money when the markets go down.
Well, I'm just saying, like in general, like would you if we go into a bear market for the next 2 years?
No, because you'll
Business as
trade.
usual.
You could trade like instruments like the TZAs, which are the inverse of betting the market going up. The SDAO, the QIDs. So there's other instruments to trade from the long side, to capture that, and you can always short. So if you don't feel comfortable shorting, but you want to buy instruments like the TZAs or the QIDs or the SDAOs, which are the inverse of the market going up. So there's always opportunities. So there's other vehicles to trade. You just got to expand your horizon.
Yeah. It's one thing I've learned is obviously volatility is pretty much what you need in terms of. I'm not so much worried about if it's green or red. I'm more worried about if I'm getting action.
Well,
up or down.
Right, but even like today, for example, it's pretty slow at 10:46 in the morning. But there's been opportunities here across the board. I'm not going to deny that. Some good opportunities in the futures contracts. Gold dropped from the time we got the sell signal, I think almost $6-7. Crude oil's all over the place. So there's opportunities. It's just having the technology and the asset classes that you want to trade. And you know what? Guess what? If there's nothing there's nothing there. Preservation of capital. You just want to wait. Because I've been around a long time. Things happen.
Yeah.
So
let's say you get a day where it's just like the end of the world. We're down 700, 800 points. Are you just the whole time just banging trading?
Yeah, all day. It depends on the type of trader. I have guys who are with me on every trade. Got some guys who they just wait. It depends. It really does. But I'm here to do one job. I give it a 1,000,000% every single day. So I'm not thinking. I'm just seeing what I'm seeing and letting the technology tell me and the direction that I'm able to see using my proprietary software. I'm just calling out what I'm seeing. I can't. There's so many DNAs in the world. I don't know who's trading what with me or what. Like today. We were shorting the 10-year bond all the way down. So there may be some guys who don't trade the 10-year bond, but there are guys that do. So other guys who are S&P traders or guys who are trading oil or forex or waiting for moves like in Netflix. When I said Netflix take out the 361.5 level and then it drops, almost more than $1.50. So it's up to the trader overall to get the comfort level of what they want to trade.
So like with your algorithm, is it always the more and more data you're gathering, the more and more time you're using it, is it getting better and better over time?
I've never tweaked it since the time I started running it forward. So it is what it is, and I believe in forward testing, so I always just ran it, and I never once touched it since I had it implemented on my software, so on my chart. So I believe in it. I stuck with it. I've taught many people how to use it, and this is what I use every single day, and I teach people how to use it every single day.
45 trades, 2 o'clock. What are you thinking? How many more trades a day? 2 more hours. Market close.
Let's say 45. We'll push it to about 60, 65.
60? All right.
Yeah.
Have you...
That's what's been averaging with these slow days when there's no vol. I mean, look, the Nasdaq futures are down less than $1. The Dow's down 30.
Is there one day that really stands out? Like, you remember, like, back when you were trading, like, one day that you really remember, like, that was historical in a sense?
Well, that Monday, was it October 19th? What was it? October 19th? Yeah, October 9th, Black Monday. I never forget that. Short this gold, 1610. Yeah, I think that day was it. The Friday before was pretty wild because I had to come in that Saturday morning. But you're talking volatility that, was just, back then, 500 points on the Dow. I mean, that's like earth-shattering. Now we see the Dow move 1,000 points a couple times in the last year. You're just like, okay, well, it's at 26,000. It drops 1,000. It's not so bad, right?
Yeah.
But, I've seen, when you're in the game as long as I have been for 36 years, you get to see a lot of different things, and there's nothing that I probably haven't seen than most veterans who've been in the game as long as I have.
I mean, seeing the market go from 1,000 to
26, almost 27,000.
27,000. I mean, now when you see a big dip, it's just like nothing.
Nah, I mean, it's like anything else. You don't get psyched out by it. It's not you're in a mindset where you're just prepared to see anything at any given time. And that's why, like I tell people all the time, don't overthink things, So if you're going to trade futures, if you're going to trade stocks, or if you're going to trade foreign exchange, don't overthink. Just learn, look at the pattern, identify, and try to be, number one, on the right side of the market. And then wait patiently for the patterns to set up. And that's what I do all day long. Like right now, there's nothing going on, and I'm just waiting for patterns and trends to develop, or a reversal here in the market. So right now, everything is bullish right across the board here. So I'm not looking at anything really much here. Hey, let's take an aggressive long here. S&Ps go 85, go 84, go 84, 89. Use the 83 and 83 stop. Hey, S&P, take an aggressive long here. The 3 and the 5 minute time frames are reversing here on the diamonds and the S&P futures and the NASDAQ. But any push up, I'm buying this off the 15 minute time frames. Let's look to buy these S&Ps for maybe a 1 to 2.5 handle scalp.
All right, so the market just closed. We're going to get a little recap from Steve, kind of what went down today overall, where they're at, what's going on, how many trades they ended up at. I think earlier Steve said they were looking for around 60 trades, so let's find out exactly where they ended up at. So Steve, where are we at? What's going on?
I know, guys, what was the nut number today? 58. I could have did a couple more.
You could have got 2 more in there. I think you had 2 more just kind of popping. Overall, I mean, you feel a little bit of pressure. I mean, 36 years trading, I mean, kind of like you got to perform, like.
The only pressure I really get is when I leave here.
Yeah.
And this is like my environment. I feel really contained in here, and I know what I'm doing, so it's like peace of mind here.
I think they get a little bit of pressure. The assistants back there, a little bit of pressure in there. A little couple moments,
They know me.
They know what's going on. But yeah, really cool to see kind of what went down today, seeing the overall. I think it's interesting definitely to see how you're trading, forex, the gold, the futures, the oil. It's all in your head. It's hard to explain, but I mean, you're seeing it and it's happening, and you're not. It's like that. Like it's not even. It's like instinct where you're just like you see crude oil and you're like, oh, right here, let's get in short, and then it's bam, and you're seeing that stuff where most people would have to pull up a whole chart and really take a lot of time to kind of figure that out. So that's obviously part of your
that
algorithm. And
I spent 8 years building this, and plus I do this every single day. But more importantly, the people who come into my live room get this technology, so they see exactly. They get that good as time goes on. If they're committed to it, and they want to learn, and they want to see it, and they want to really do well for themselves. So they have the same technology I have.
Yeah. So in the actual chat in the live room, they can see the same chart you're looking at, the same indicators. They can use all that, even if. They can keep an eye on it and kind of learn the same way that you teach them. Keep an eye out for this indicator, this setup.
Yeah.
And you're basically seeing what you're seeing.
100%. And when there's a lull, I'll go in and I'll explain it. I'll just bring up the chart and I'll start explaining why I did what I did, and I start pounding it into them. And remember, I told you patterns repeat themselves over and over again. Whether it's a pattern based upon the way my algorithms line up, or a pattern based upon price action. So that to me is. The way I wrote this, I'm pretty much able to see that happening. And when I do get a reversal or a buy-in or a sell signal, then I know how to trade it. But again, it's all visual, so I want to be able to be on the right side of the market. I'm not guessing, and I'm very disciplined. I have my stops in place, and there's no averaging down, preservation of capital. You got to have all this, in the back of your head. So
what you're telling me here is that you're not gambling.
Well, anytime you put money at risk, it's always a
But you're not just going in, and it's not 50-50. You're not going in there and putting on black.
No, I mean, the bottom line is, I'm not in this to be right 50%, 60%, 70%, 80% of the time. I want to be right. My consistency is everything for me. So I want to be right 90%, 90 plus. And that's what I try to get people to have that mindset, So that's what my goal is here every single day.
I mean, I think the biggest thing when people ask about day trading, oh, it's just gambling. I think at the end of the day, what we're really doing here is we're managing risk. You see an opportunity where you see a small amount of risk, but a reward, and you do that over and over and over, and you're consistent, you can make money trading as long as you have a predefined risk for every trade, and you understand that, like you said, you can't just start buying the E-minis and just keep buying until it goes.
Well, I'll be
down.
honest with you. I mean, I've been trading for 36 years, and since I've had this, and I wrote this 10, 15 years ago, I was just trading based upon the depth of the markets. I was trading, anywhere from 1 to 4 or 5 million shares any given day, and back then there was depth of the market. So anytime I saw a buy or sell program come in, I would just lift in offers, and then hopefully that the buy program in that example would continue, and I would be getting out into it. But when the era of decimalization came around, I'd tell you right now, if I didn't have what I have here, I would never be able to call the market. I mean, I spent 8 years of my life building this, and this is what I do. During the day when there's lulls, I constantly teaching, I'm constantly educating people. I just want people to get better, traders to get better and better and better. Give them the right tools, make them consistent, and and hopefully that they're on the right side of the market with me in trading.
Really cool to see it in action today. Hanging out with you. Thanks again.
Thank you.
For all the knowledge, information. We got a lot more videos to come from Steve really soon.
Thanks.
We got to go. We're out of here.